Peter Diamandis is calling the potential SpaceX IPO one of the most consequential private-to-public transitions in tech history.
Right. In his Metatrends framing, he actually pegs this as the largest test in 2026 of whether public markets will pay frontier tech multiples for these massive capital-heavy operations.
I mean, that is a huge claim. But I have to ask the obvious question for everyone listening.
Yeah.
If you are a Series A or Series B founder right now, building AI SaaS or data infrastructure, why on earth does a rocket company's public listing matter to you?
It's a fair question. It matters because this represents pure category validation for long-duration, capital-intensive bets.
Okay, so it's not just a single stock event.
Exactly, no. It's about funding convergence bets, which are investments that combine multiple deep tech layers simultaneously, like artificial intelligence, digital assets, and physical infrastructure.
Right.
And those are notoriously difficult to fund because the timeline to profitability is measured in decades. You are asking investors to stomach tens of billions of dollars in upfront R&D.
Yeah, and to put that scale of capital into perspective, we are looking at funding flows roughly equivalent to the entire gross domestic product of a country like Iceland, or the total annual operating budget of a mid-sized American city.
Which terrifies a traditional venture capitalist.
Oh, absolutely.
I mean, they're used to evaluating standard B2B software where they see a return on ad spend in 30 days. You're asking them to fund the GDP of Iceland on the promise that the physics will work out eventually.
Yeah, they want clean unit economics right out of the gate. It kind of reminds me of the difference between opening a restaurant and building a multi-state toll road.
Oh, that's a good way to look at it. Walk me through that.
Well, standard software is the restaurant. You sign a lease, you hire staff, open the doors, and ideally you get paying customers sitting at your tables on day one.
Right, very clean.
Extremely clean.
Mm-hmm.
But your scale is fundamentally limited to the physical number of tables in your dining room. Frontier infrastructure, though, is the toll road. You are pouring concrete and bleeding, eye-watering amounts of capital for years.
Yeah, a massive capital black hole.
Exactly. And it takes all that time and money before the very first car even drives onto the asphalt and pays a single toll.
And that is precisely what the SpaceX IPO tests. The public market is deciding in real time if it's willing to buy the toll road while it is still being paved.
Wow, yeah.
If the broader market accepts this capital-heavy profile and prices it at a premium, it completely resets the baseline risk appetite for every private market investor funding your long-duration AI infrastructure.
Okay, but strongest argument against this,
Mm-hmm.
let me steel man this skepticism here.
Go for it.
SpaceX is a category of one. I mean, they have massive government defense contracts acting as a financial backstop, plus a unique cult of personality around the founder. How do you answer the board member who says you absolutely cannot use Elon's rocket company as a comparable for our Series B AI company?
Yeah, you have to concede that point. I mean, the brand premium is real, and those defense contracts provide a revenue floor a typical startup will never have.
Right, it's a massive safety net.
It is, but you hold the line on the underlying financial mechanic. It's about the fundamental appetite for moonshot infrastructure at scale. You explicitly tell them, look, this breaks if public markets treat SpaceX purely as a legacy aerospace contractor like a Boeing.
Oh, I see. Rather than a technology platform.
Exactly.
Yeah.
If it's priced as a tech platform, it substantially strengthens the AI plus frontier infrastructure fundraising narrative across the board.
That makes total sense. So for the operator listening right now, what are the actual Monday moves here?
I've got 3 specific ones. Number 1, refine your moat narrative. Stop pitching your AI as just a software tool. Start positioning it as a long-duration, capital-intensive infrastructure bet to capture those frontier multiples.
Act like the toll road. Love that.
Number 2, adjust your board pitch. If the IPO price is high, immediately use that frontier validation argument in your next board meeting to justify heavier R&D spend.
Yeah, point to the macro sentiment as cover for the costs.
Exactly. And number 3, watch the syndicate. Track exactly which crossover investors buy into the IPO, because those are the firms actively validating convergence bets with their capital.
And just to clarify, crossover investors are those massive funds doing both late-stage private and public equities.
Right. Those firms become your ideal late-stage targets. You go straight to the institutions that just proved they buy toll roads.
That is incredibly sharp. Okay, if you remember nothing else, here's the whole thing in 3 sentences. Diamandis flags the SpaceX IPO as the definitive test of public market appetite for deep tech in 2026. It matters because it sets the valuation floor for any capital-intensive, long-duration startup. If the market buys a toll road before it's finished paving, your AI infrastructure pitch just got significantly easier to fund.
But here's what this can't tell you yet. We don't know exactly how much of that premium valuation will trickle down to software-only convergence bets that lack a physical hardware component.
The real thing we're watching is whether this broader risk appetite for moonshot infrastructure holds when the initial post-IPO lockup periods expire.
That's your AION Founders briefing. Stay informed every weekday. Subscribe now and download the AION app at aionpowerhouse.com.